with that in mind, let's go to the third book of accounting. And to introduce that, who knows what accounts receivable is? Joanne?
Where we receive payments from customers that owe us money.
Okay, it's money that our customers, typically customers, it could be others, but generally it's going to be customers owe us either for a service or a product that we sold them, okay? So you have probably utilities at home and you owe that utility bill, right? The utility company has granted you credit and you're one of their accounts receivable customers, okay? They have your name and the amount that you owe them in accounts receivable. Now, our companies oftentimes have accounts receivable. The company that is illustrated in this general ledger has accounts receivable. So I'm going to ask your help. Here's customer accounts receivable. This is in the asset section of the general ledger. In here, it shows where the information came from to arrive at a balance, okay? Now, Joanne, how much do all of our customers owe us right now? $6,438.64. Okay? Now, this might be the total of 100 different customers that owe us that money. Can you tell, Joanne, by looking at the accounts receivable general ledger page, who it is, who our customers are?
No.
It doesn't tell us that level of detail. It doesn't give us the names. It just tells us in total how much it is. Now, $6,400 for small businesses might be quite a bit of money that they've got out, right? If you were the small business manager or owner of this business, would you want to know who it is that owes you the money? Why? Why?
So that you can contact them.
You got to contact them. You got to collect it. You can't do just this, okay, and hope that they'll pay. You have to go through the process of getting that money in and billing them and invoicing them and so forth. So that's where the third book of accounting comes in. It's called a subsidiary ledger. And for select accounts in the general ledger that we need additional detail for, we might have one of these. So we might have 3, 4, 10, 20 of these different books, each representing the account detail for a selected account in the general ledger. So in this particular book, we have a page for every one of our customers. Do you see that? Now, Jera, tell us who this customer is and how much they owe us.
Arnold's Auto Repair.
And how much does Arnold's owe us?
$305.90.
$305.90. Okay? Stephen, who's the next customer here? How much does he owe us? And what about the next one?
Can't read it. Partner ticket?
No, right here.
Oh, right there. What is that? Penn Delegations Auto Rental.
Okay, and how much do they owe us?
$620.80.
$620.80. Now, 100 different customers in this book. If I were to add up the balances for all 100 customers, how much should it add up to? $6,438.64. Is that right? What if it doesn't? That's right. It's a problem. Okay? Which one are you basing your statements on that you're sending the customer? Is it this one or this one? Why this one?
Because that's what they owe.
And this doesn't tell us the customer details. So we've got to send the statements out based on this amount. Number one problem we have with computer software today, accounting computer software, is that somebody forgot to tell the programmers in several cases that these two numbers have to equal. Okay? And we go into businesses oftentimes where they're sending statements out of this that don't agree with this. This happened not too long ago with the company. One of our students picked up. One of the things we tell you when you go into a company is to audit it real quick and make sure that these two balance. I mean, that's just one of the steps of the audits. There's several things that we do in there. And so she did that. They were $15,000 apart. And we're not talking about a big company. We're talking about a one-person operation. $15,000 was a substantial amount of money to this person. But he thought he got this computer software and it was all right, everything was good, and so he pushed the button to print out statements and sent them out. without knowing that he should be checking it against this. And this one was $15,000 less than this one. And it occurred over a 5-year period. Most of them were over 3 years old. He just had to walk away from it because he was too embarrassed to call his customers up and say, hey, I forgot to bill you for a statement back 3 years ago or for an invoice. So anyway, that's one thing we have to be very careful of, okay? And if you keep on top of it, it's not a problem. You'll be able to fix it very quickly and get it back in line. It's just that if you let it go, it can be a problem and develop into a major issue, okay? So, those are our 3 books of accounting. Now, the subsidiary ledger is also known as the book of analysis. And the reason why is because it gives us information to analyze the account in the general ledger. If we didn't know who our customers were, and all we know is the total is $6,400, we wouldn't have any way to really check to see if that $6,400 is right or not. But by having our customer detail, we can do that, okay? Now, let me just illustrate this very quickly by showing you what I mean. Over here in the assets section of the general ledger, we have an account called accounts receivable. This account has a balance of $6,438. Over in the subsidiary ledger, we have a book that contains the customers' names, and it contains a balance for each of these customers. The total of this has to be how much? $6,438. These two numbers have to tie, okay? Now, accounts receivable is monies owed to us. Accounts payable is monies we owe, okay? We don't have customers' names in our subsidiary ledger. We have vendors' names. And we show how much we owe each of these vendors, okay? So we look at accounts payable, and that's a liability account, as we'll talk about today. Accounts payable represents the amounts we owe. If the total of this balance is $3,000, what is the total of these vendors' accounts have to be? $3,000, okay? And if they're not, we have a problem. Now, what about payroll? What type of detail are we going to record in our payroll subsidiary ledger? What's that?
Each person that you got here in their payroll.
Exactly right. All of our employees. They'll have a page for each employee, okay? And why do we care? We've paid them. Why do we worry about it?
Because you're going to get stuck paying taxes on them?
Yes, it's for the government. W-2s. A W-2 is just simply a printout of the payroll subsidiary ledger in an IRS form. That's what it is, okay? And so we keep track of all that information for the W-2s in the payroll subsidiary ledger, okay? Now, with that understanding, where does the information for these come from? It comes from the journals. So we take the information from the journals and put it in the subsidiary ledgers. We also take the information from the journals and put it in the general ledger, okay? So this is where we start in the journals, and then we transfer information both ways. Do you follow that? Okay? So the total, this $6,438 balance by customer had the same source as the $6,438 balance in the general ledger. So they should work out to be the same number. If they don't, we have a problem. How many of you have been accounts receivable clerks before? Okay, a few of you have. You'll recognize this. Now, you can go look in the classifieds, and you can see accounts receivable clerks all over the place, okay? And so this is what an accounts receivable clerk does. They're in charge of recording the sales and the cash receipts and transferring the information into the subsidiary ledgers, the accounts receivable subsidiary ledger. That's what an accounts receivable clerk does. Do you recognize that? Sorolla, do you recognize that? That's what your job was, okay? How many of you have been accounts payable clerks before? Okay? Accounts payable clerks, they record the purchases on credit and the payments, the checks, to pay off those, and then they keep track of the accounts payable subsidiary ledger, where they record by vendor who they owe, okay? And then they record the checks to show that they've paid that off. And finally, the payroll clerk. How many of you have been payroll clerks before? Okay, a few of you. Payroll clerks record the payroll entries, calculate the taxes, do the quarterly returns and things, all things we'll talk about later on, and then keep track of the payroll subsidiary ledger, which is the employee ledger, okay? Now, can you be an accounts receivable clerk for many years?
Yes.
It's a whole profession in its own. I mean, there are people that are accounts receivable clerks for 20 or 30 years. They make an entire career out of it. And can you be a good accounts receivable clerk after 20 years? Can you be a good accounts receivable clerk without understanding what happens in the accounts payable side?
Yes.
You bet. Can you be a payroll clerk without understanding accounts receivable and accounts payable?
Yes.
Yeah, you can be very good in each of those different careers or professions. Okay? The problem with those professions is, for many people, they don't pay very well sometimes. Now, what's the entry level usually, do you know? Yeah, nine. It can go up to $12 entry level. And you can grow in there, but you'll never really get to the point that you'd like to unless you understand this part of the process as well. This is where it all comes in. And this is where the office manager or controller works with this. Why? Because they understand how to set this up and how it all comes together to create the picture of the business. Now, where would you like to spend the next 4 weeks of your time? Over here or here? Right here, right? These are the bigger incomes. Now, we're going to have to get into these, too, because you've got to understand how these work and how these function and how to set them up. You've got to understand how it works with a construction business and how it works with the manufacturing business. And so we're going to cover all those different types of businesses to show you how they work. But frankly, we don't need to spend a lot of time on these to be able to master them. This is the thing that most people get confused by, and this is where you separate the bookkeepers from the accountants, is understanding this general ledger.